All right, guys, back to work. It's about that time of day again here after all. Weekend's over. Hope you guys had a fantastic weekend break, but I think it's time to get back after it here this evening. It's Monday evening after all. It's March the 8th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's so great to have you with me because my job tonight is to help us find the best trade setups and capitalize on the best high percentage opportunities for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you guys and gals for tonight, tracking a bunch of great setups on the charts for tomorrow. The big question I have is will the S&P get dragged down by this Nasdaq, right? Nasdaq's made a full rotation. S&P appears to be just getting started. Will the S&P get dragged lower by the Nasdaq? Will the Nasdaq complete that pendulum swing, right, that objective? And will the gold enter free fall mode tomorrow? Because if we crack below that measured move on gold tomorrow, there's not much of a safety net down there for those buyers. So will the gold crack wide open and run lower? Will the Nasdaq complete its pendulum swing? And will the S&P, of course, right, will that get dragged lower right along with it? Well, we got a lot to cover in tonight's video news. We're going to answer all those questions and find the best ways to capitalize on those moves for tomorrow. Before we jump in, though, and get our hands dirty on these charts, I just want to make sure to remind you to subscribe to our YouTube channel. You know, we publish this video newsletter every evening with our best trade ideas for the following day. So please make sure you subscribe. And as always, if you have any questions, drop those questions in the comment section below. I'll get all the questions answered later on this evening. And if you like the video, don't forget to subscribe, hit that thumbs up, hit that like button, and again, drop a comment in the comment section if you guys have any questions along the way. So again, big question is, will the S&P get dragged lower? Will the Nasdaq complete? And will gold equal free fall? You can see all three of these markets are bearish right now. And we're looking to basically sell retracements, right? We're trying to short the bounces, short the pops, right? On the S&P, get a bunch of key levels of resistance. Short the pops on the S&P. On the Nasdaq, we got that range overhead. So I want to short above the range tomorrow. And of course, on the gold has that range below, but I'll take a beautiful spot up overhead. I would love to short that bounce on the gold here for tomorrow. So three bear markets, three slightly different scenarios. We're looking to sell short on all three of these markets, and we're going to break this down, of course, in tonight's video newsletter. Now, before we jump into each individual chart, I do want to take a look at the calendar for this week. This, of course, is the second week of the month. The first week of the month is usually classified by high volatility and non-farm payrolls. Now we have the week after, right, the second week of the month, what is really known as more of a quieter week of the month. Not as much news this week. As you can see, there's not a lot of big red star news events this week. Fed speakers are on pause this week. And there really isn't, besides the passing of that new COVID stimulus bill, the increased vaccinations, and of course, right, any other unexpected news. There's not a lot of scheduled news as we go into this second week of the month. So tomorrow, of course, Tuesday is a good example, right? No major news tomorrow on the calendar. Now, lately, what that has meant for us in our trade room is the best setups have been around that kind of 9:30 to 11 o'clock block, right? So since there's no major news to kind of give us an idea of where the big, injection of volatility will be, we definitely want to be keeping our eyes open on the opening bell tomorrow, 9:30 Eastern time, the 10 o'clock shock, right? Top of the hour at 10 o'clock. If I had to guess, based on what we've seen so far, that 10 o'clock to 11 o'clock hour tomorrow, if you could only be at your desk for an hour tomorrow, that would definitely be when I would recommend getting there. And of course, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. We'll trade the entire morning session with all the members in the trade room. As we go later on in the week, got Wednesday CPI, jobs on Thursday, got E-mini rollover expected on Thursday as well. And of course, the PPI report on Friday morning. So big news of the week, probably going to be Wednesday. We'll talk about how to trade that in tomorrow night's newsletter. Again, be on the lookout for E-mini roll on Thursday into Friday. That could be Thursday or Friday this week. We'll know more as we go. But again, no major news on the schedule for tomorrow. So keep your eyes on the top of the hours, 10 o'clock, 11 o'clock. Those are probably going to be when we start seeing the best setups in our trade room tomorrow morning. And again, don't forget, trade room opens 8 o'clock Eastern time, Monday through Friday. I would love to see you there, right there with us. Back to our charts here as we dig into some setups for tomorrow. S&P, Nasdaq, gold. Everything's ready. Glad to see you are ready here as well. Let's jump in first here and take a look at the E-mini S&P. The S&P, of course, first of all, what do we know about the S&P right now? We know the market is bearish, right? We know the market is, right, more bearish than bullish. But the biggest clue we have on this, if you look left and go a little bit outside, right, a little bit wider here, let's not forget where we are in the big picture. We have this big, well, not huge range, but we used, remember, if you recall from last week, we used this range as a magnet last week. Remember last week, we finished off with kind of that tale of two ranges, and we used the smaller range to find the entries back up into that bigger range, right? Well, you can see what's happened here. The range acting as a magnet, as it always does, the amount of the move below the range is pretty much equal to the amount of the move above the range. So very interesting how the market swings lower, comes back up, and of course you can see here now pretty much completes that pendulum swing. So that gives you some context as far as where we are on the S&P. And what that really tells me is this range down here is still acting as a magnet. Whether it's a range, maybe it's that round number at 3,800, but that range is definitely acting as a magnet. Now, if we zoom in even closer on this, you'll notice very strong run, right, to finish off yesterday's trading session, or not yesterday, last Friday's trading session. Anytime we see a strong move in one direction, we expect a pullback and a retest of the high. So you'll notice they got their retest. They pretty much finished off that pendulum swing. I wouldn't worry about that being that far away from it. That's good enough as far as I'm concerned. And then we get that 1, 2, 3 reversal pattern now, and the market takes off running lower. As you can see here now, that range, right? So now we can zoom back in now, and you can really start to see now kind of what the bigger picture looks like. The range is the magnet. We're anticipating now, as you can imagine, going back down into this trading range and potentially all the way back to the extremes down at that 37.30. Now, 37.30 is a big bite to chew on for tomorrow, but as I mentioned in the introduction slide here, the Nasdaq is already way down here. Right? So the Nasdaq could easily drag this thing right down along with us, right? Especially if we get some unexpected news here as we go into tomorrow's trading session. So again, we know we're bearish. There's no doubt about that. We know we get the range below us acting as a magnet. I would love to get short on this market. I'd love to sell at areas of resistance. And what I've done is I really want to try to find a way to get in up above, right? Up above some of these prior swings. Now, you'll notice real quickly here, I've got this weekend gap right here, that weekend gap. Now, what is a weekend gap? First of all, because there's 3 of them this week. There's one on each one of these markets. There's a weekend gap on the S&P, the Nasdaq, and the gold, and I'm sure probably every other futures contract in the world right now. What is a weekend gap? The weekend gap is the difference between Friday's close and Sunday's open. Whenever you see a big gaping hole like that, right, on a chart, you know that closing price from Friday is probably going to be a magnet. So that 38.40 half area will be on this chart all week this week, right? And remember what we saw last week. If you watch last night's or last week's markets, we kept going back to that weekend gap over and over again. So don't underestimate the power of those. Again, Friday's close is what that price is, 38.40 half. That's Friday's close. So just in case you're wondering what those areas are, they are gaps. Yes, they have been filled, but they will act as magnets throughout the rest of the week. You know, a lot of times they'll act like big magnets until we finish off, right, the entire week here. So bear market, I've identified a couple key areas of resistance, right? Some prior swings, a channel up here. So this is definitely where I want to get short. The big question is is how does the pullback look? That's the big question. In my eyes, there are three types of pullbacks, or in this case, three types of retracements. There are shallow pullbacks, which barely get right into those areas. Shallow pullbacks, I always like to look for what I call trap entries because I'm trying to sell as high as I can. If I can get a deeper pullback, then what I'll do is I'll look for the buyers, try to buy the pullback off the moving average, and I'll trade into their stops with failure patterns. If we get a much deeper pullback, I use the same idea, the same, buyer failure pattern, but a little bit more patient, let's call it, right? I'll let them try once, let them try twice, and then once those buyers try a couple times, then I can look for that short going back down. So real quickly here, I've got my areas of resistance that I want to target. I just need to pull back now. The bare minimum would be getting right above that 45, 45 half, let's call it. I'd like to get up around that high, right? Again, ideally, I'd like to go a little bit higher than that, but hey, it's a very strong move down. The range is a magnet. We may not get that deep pullback. What will oftentimes happen though is the buyers will come in, they'll try to buy the pullback. And again, what I want on a relatively shallow pullback here is a trap entry. And a little bit of that is because of that weekend gap, but more importantly, it's because of that channel. I want to get up into that channel. So if all we get is a shallow pullback, I'm looking for trap entries, right? We call these traps to get in on the way down into that trading range. Ultimately, I want to sell as high as I can, and traps make that a lot easier. Then, of course, if we do get that really nice, juicy pullback, that's what I really want right now. Then what I can do is I can anticipate now when I see that strong move up, I can anticipate buyers coming in trying to get long on the pullback. Right? They'll try to bounce up. They'll try to get long on the pullback. If it fails, I'll look to sell it back down again. Right? We call these failure patterns. Now, failure patterns oftentimes will turn into pullbacks on the other side. So keep that in mind for a kind of a combination setup, right? A buyer failure into a bear pullback as we go. Very, very common there, right? Failure pattern and pullback pattern to take the entry setup, right, on that move lower back down into that trading range, right? But maybe the buyers really get this thing going, right? Maybe the buyers really punch this thing. Maybe they go all the way back up to retest the high, right? Or maybe they just simply take out one of these highs up here. Strong move up, right? If I see a real strong move up, now I'm really concerned about what? I'm concerned about the buyer's momentum. And so in that case, I want to let those buyers try a couple times. One try, two try. Now, what happens a lot on these is you'll get that failure, right? And we can sell, think about it, right? If you're a buyer and you're trying to buy that pullback, your stop is sitting right below that low. So think about how that stop can get run, and I can literally sell into those stop losses. Now, one of my favorite techniques on this is after we get this move to go up, try and fail, is to draw a trend line off of that low, off of that high, and grab that next pullback from there. Okay, these are a great kind of, again, combination entry to sell high with that buyer failure. This is called a nested failure. And then, of course, that pullback off the low or the high of that new channel. So three different kind of types, right, of pullbacks here. Shallow pullbacks for traps, right, decent sized pullbacks for failures, and deep pullbacks, right, for those nested failures, right, into those hidden channel pullbacks going lower here. Now, you're probably wondering right now, all right, Joe, at what point does this market turn bullish, right? If we do get that pullback, right, at what point does this thing start to be a bull market? The key is you've basically got to get one of these, right? You've got to get an up, a back, and a go. I call these 1, 2, 3 reversals, right? I want to see it go up. I want to see buyers hold the pullback and jump off that moving average, right? Now, it's not going to be enough if it goes up, pulls back, and looks very strong off the moving average. If that's all we get, at that point, I will still keep looking for that 1, that 2, and short this sucker back down into that range magnet. However, if we can get a strong move up, if the buyers hold a pullback and if they can really blast this thing, really see a strong run higher, at that point now, I've got what I call a 1, 2, 3 reversal pattern. I can now trust the buyers, right? The buyers have controlled this market. The range, of course, at this point now has been broken down for whatever reason, and now I can structure my trade long. How do we buy it? Do we chase after it? Certainly not. We mark up that high. We mark up that low. Right? So I'm drawing off the highs. I'm not drawing my trend line like that. Okay, that will be a waste of time in the long term. You want to mark up that high, mark up that low. We get that 1, 2, 3 reversal. Now look for that first pullback off the low of that channel, right? The first test is always the best test, as I say. Now, when it comes to entering on that pullback, we really have the pick of the litter. My favorite entry setups around those lows look like this, right? Where you get that 1, 2, 3, mark up that high, mark up that low, and you get that failure pattern off of that low, right? So off that low, I'm thinking failure setups, trap setups, into pullback combinations. Those would be some great opportunities for us to send this market running higher. Where would our targets be overhead? Round number at 3,900 is a big, easy target. As we go higher from that, I've got 3,912 and of course 3,935 overhead. So now we've got a pretty good plan, right, if the market reverses. Again, we know how to find that 1, 2, 3 reversal, that hidden channel pullback. And then remember, right, again, we have really any of our favorite setups we can buy off of that low. Failures and traps are the most common. Pullbacks and strength are going to come thereafter. In fact, if you want to go even deeper into this, if you want to learn all those entry setups, unfortunately, I can't go over all the details in this short video, but if you want a deeper dive into all the entry setups that we use every day in our trade room, you got to grab the free trading course. I'll put a link here for you in the upper right-hand corner. Grab the free trading course. You'll learn all of our favorite entry setups. So the next time you see a 1, 2, 3 reversal, you'll know exactly how to time the entries properly. Unfortunately, that's stuff I can't go over much here in this video, but if you want more deeper dive into that, if you want all the details, grab that free course that popped up there, get registered, and I'll send you all the details to your email inbox. That way we can make the most of our time together here on this video. Now, what if we end up back in the range here and we go sideways here for a while? Well, how do you trade that? Well, at that point now, we're very bearish. And so if it's a range, the most important thing you always want to think about is whenever you have a market that goes into this range, right, and goes sideways, or let's say the market goes sideways right here, right? It doesn't have to be back inside that range. But let's just say, for example, that the market ends up going sideways here tomorrow. If we end up going sideways, the key is we want to find areas of resistance above the range, and you want to combine those areas of resistance with what we call a failure pattern, right? It's very simple. Wait for the price to go up, test the area of resistance. This could be a trend line coming down. It could be a swing high. You just want to find some level of resistance above the range. Wait for the market to pop above the range. Wait for buyers to foolishly try to buy that pullback and just sell right into their stop losses. Because if you're a buyer, right, if you're a buyer and you're buying that breakout pullback, you are against momentum, right? It's not a bull market. It's not even a trending market, for crying out loud. It's a range market at that point, and ranges act like magnets. So if we do get that pop up after a range, keep your eyes on the short side. And whatever you do, don't trust that breakout, right? I don't want to hear anybody telling me, I tried to buy the breakout. We are not trading breakouts. We're fading breakouts. We're waiting for breakouts to trigger, and we're positioning ourselves to sell short right into where those, what is assumed to be inexperienced traders, trading those breakout pullbacks. So that's the way you want to trade it, right, as it goes sideways. And then, of course, as we go lower, right, as we go lower, there is a lot of space, as you can see here. If we can crack below some of these lows, right, we got to crack underneath, obviously, today's low. So we got to get this thing going lower here to really kind of accelerate this momentum. Now, as we go lower, there's a couple things that you kind of want to think about. First of all, if the market keeps on grinding lower, right? If it just kind of grinds, you see how it's kind of grinding lower, right? Not too impressive, but if it keeps on grinding lower, what I'm going to do is I'm going to keep adjusting my channel. I'm going to keep finding those areas of resistance, right? And I'm going to keep waiting for that pop, those buyer failures, and sell back down again. All right. So just keep it in mind. If this thing grinds, right? If it grinds lower, I'm just going to go out. I'll draw that channel down. I'll bring it down further. I'll update my levels, right? And I'm waiting to short the bounces, right? I'm waiting to get up around the high of that channel, get those buyers trying to buy the pullbacks. Same idea, right? If it really races higher, let them try twice for that nested failure, right? Same basic idea, right? So not a lot changes if the market grinds lower. We're going to still wait for that pop up, shallow pullback trap, deep pullback failures, right? Same basic strategy. The big question though is will the market enter into a kind of a free fall? Because again, the Nasdaq, right? The Nasdaq is already underneath its range. It could easily kind of out of sympathy, as they say, drag this thing lower as well. So if we really start seeing this market run lower, what I'll do is, let's say, for example, we make a move down to those lows, the bears come over, they hold the pullback, and they jump, right? If I can get that 1, 2, 3 breakaway move, now we know where the bears want to go. The bears want to get back down to that, 34 down there? I'm not going to chase after it. We're going to mark up that low, we're going to mark up that high, and we want that first test off the high of that channel. So again, this is if the market really 1-2 blast, right? Really jumps off the moving average there. Then we start looking for buyer failures, right? Bull traps, pullback, and strength moves, right? We wait for that price to pop up, get above the moving average, into the top of that channel, right? Buyers try to buy, failure, into pullback, into strength, right? Into, of course, trap setups as we go. Each of these four, right? Failures, pullback, strength, and traps, each of these four, right, are valid after we get that first pullback to the high of that channel. And again, I'm not going to go over all those details right now, but you can get a much deeper dive into that stuff, right? Lots of examples of those patterns I'm talking about in that free course linked up in the upper right-hand corner. Another thing to keep in mind, if the market does just nosedive, right, starts to literally accelerate going lower, that's when you want to look for those traps, right? So if it really starts to collapse, just focus on traps to avoid chasing the market going lower, right? So again, if it 1, 2, 3s, we mark up our channel, right? If it 1, 2, 3s, mark up that channel. Easy money off the high of that channel. But if we don't get a 1, 2, 3 and the market just collapses going lower, traps are your best bet on the way down to that 37.28, 37.20 area, those major lows at the bottom of this chart. All right, guys. So now we got a pretty good plan. We know how to trade the bounce. We know how to trade it as it goes sideways, if it goes sideways tomorrow. And we also know what to do if this thing really accelerates as it goes lower. Let's keep going. S&P is looking good. How about some Nasdaq now? Nasdaq up next. Now, Nasdaq is very similar to the S&P, but you'll notice there's one big difference. The Nasdaq has already made that move lower, right? They've already got that move lower here. So what do we know on the Nasdaq? The Nasdaq, very similar but very different. We can obviously see the bears have control. There is no doubt about that. We can also see, of course, if I look left, you can see that range from last week. Now, what's very interesting about the range on the Nasdaq, remember the S&P? Let's go back to the S&P real quickly here. The S&P, of course, was a tale of two ranges, right? S&P had that range here and that range here. The range right in the middle, this big one, that's the range we're using on the S&P. But on the Nasdaq, though, they've now broken free of that bigger range and they're using that smaller range. Okay, so the S&P's trading up here, the Nasdaq is way down here, comparably speaking, right? Apples to apples. If we think about this, apples to apples, the S&P is in a lot better position than Nasdaq. That's why I wonder if the S&P will get dragged down, right, by this NQ, or if the NQ will take off to the upside. We'll see. So go back to the Nasdaq here. There's my trading range, right? You'll notice there's the bigger range that the S&P is using. The S&P is obviously using that bigger range. The Nasdaq, you can see, is using the smaller range. right? So now that we kind of know what's going on and why it's very interesting to see the S&P so much higher than the Nasdaq here, I've got my range here, right? We go all the way up, right? All the way up, and we come crashing now back down into that trading range. I'm marking up the amount above the range. I'm marking up the amount below the range, and these areas down here, that 12,207, 12,165 area, those are going to be very big milestones or magnets here, right, for the Nasdaq. If we keep going lower, we got that big juicy round number at 12,000, and then a big measured move down there at 11,616. We're probably not going to see that tomorrow, but it would be definitely reasonable to think that big round number tomorrow could easily be a magnet as well, or a target as well. So a little bit more of a lay of the land here on the NQ. The range in the middle is acting as a magnet. I want to be a seller because the bears have clear control of this market. My big problem is I don't want to sell inside this range. So I want to get above the range, right, and sell at levels above the range, right? You want to buy low, sell high, and avoid the middle of these trading ranges. So I'm finding areas of resistance overhead that I can confidently get short on. You'll notice here, I've still got that weekend gap, right? Same idea on the S&P, same thing on the Nasdaq, right? It's last Friday's closing price, and it will act as a magnet, which might definitely be a big help for us to get short here tomorrow. Now, again, very similar to the S&P. If all we get is a shallow pullback, right? If all we get is a very shallow pullback here, I've got to think that range will act as a magnet. So my plan will be to wait for a trap, right? Wait for traps to get short on the shallow pullback, right? Trap patterns are my go-to entry setups whenever I'm worried about selling too low, or in this case, I want to give the buyers a couple tries, try to go back up into that trading range. So again, a shallow pullback below the range, focus on traps. A deeper pullback now above the range, this is exactly where you're thinking buyers come in, they try to buy that pullback, and we can sell right into stop losses, right? We can wait for those buyers to go up, let them fail, and we can sell back down again. The weekend gap makes a pretty interesting spot here, because if for some reason, let's say the market was to go all the way to that weekend gap, and then of course the range below us is a magnet, this is exactly where a nested failure, one try for the bulls, two try for the bulls, right? Selling either off that trend line back down or selling into stop losses back down. So if we get a much deeper pullback, respect the bullish momentum, let them try a few times here, and we can sell back from there. And then of course, as you're probably wondering, right, if we do run higher and these buyers can hold that pullback and jump going higher now, right? Now that creates what? A 1, 2, 3 reversal, right? 1, 2, 3 reversal. Now, in these situations, what I'll usually do is, because we're right back to these highs, right? We know that area is resistance. What I'll do in these situations is I have no problem buying that first pullback off the low of that new channel, but I'm not going to expect too much, right? I won't expect it to really, well, hopefully it does, right? But I'm not going to be unrealistic. What is likely to happen there is you'll likely get that 1, 2, 3 reversal. And what I always tell my clients is if the move off of that moving average is strong enough, you can almost guarantee you're going to see a lot of buyers on that first pullback to the low of that channel, right? So it's worth, you know what I always tell my clients, if it looks like a duck, it's probably going to act like a duck. If you get a 1, 2, 3, I don't really care where it is, right? It's going to probably get you at least your first target, move that stop the point of entry, lock out the risk, and see how far it'll go. What is definitely easy to kind of anticipate is we may see that 1 strong move up, 2 pull back, 3 jump higher. We may get that 1, 2, 3 reversal, and that first pullback off the low may indeed be successful. It most likely will. And then from there, as we run into resistance, then we start looking for that nested failure to short this sucker back down again, right? Let them try once, let them try twice. Again, trend line off the high, selling into stops. There are so many easy ways to short, right, a market that runs into resistance when there's a range right below you. So as you can see, we can probably get a bit of a double dip, right? Play both sides of the field on this by buying the low of that channel. And then, of course, right, flipping it around, waiting for the buyers to try once, try twice, because we are so bullish, right? Because we're so bullish at that point. But again, range is the magnet. I want to be a seller with that range below me, right? And so we'll look for that buyer failure pattern, those nested failures, and of course those, right, there are two ways to enter on that trade, right? You can sell off the top of that channel, or top of that trend line. You can also simply sell into those stop losses. And again, I cover all these specific entry setups. I'm just simply marking up where I'm looking and the overall scenarios right now. If you want a deeper dive into what we actually use every day in our trade room to actually trigger those entries, definitely grab that little, again, the little icon up there, the little info icon. Grab the free course, get registered, learn the setups. I'll send you a lot of great examples of how we apply those setups to our favorite futures markets. So that's the idea as we go lower or as we go higher. One thing you might want to watch for here is if we do go back into that range and start going sideways, right? If that happens, not a lot changes, but what you do want to keep your eyes on is levels of resistance, right? So get back to resistance up here, look for those buyers to come in, try to buy the pullback, right, and sell into their stop losses, right? If the market was to go higher on strength up there, same thing goes before, right? We've got levels of resistance up here. The range still acts as a magnet. We can now look for those 1, those 2, and back down again. Again, selling off the trend line, selling into stop losses, right? 2 easy ways to short this sucker back down into that trading range. Does that make sense? If it doesn't, let me know in the comments section, and I'll make sure I circle back and answer that later on in the evening. Okay, so that's the plan if it goes sideways, or if it goes sideways down here, right? If it goes sideways down here, which is probably unlikely, right? But if it was to go sideways down here, what would you do? You would be worried about that range overhead. Okay, so in this case, again, traps, right? We go up, buyers once, buyers twice, trap high, that short back down. That'll be a whole lot more reliable or, consistent than trying to simply call the top up here. Because for all I know, the market will hold, go back into that range, then spit out the other end. So be careful that the market goes sideways there. If it goes lower, okay, this is probably the hardest part here as it goes lower. Now, we've got that range right in the middle, right? We mark up the amount above, we mark up the amount below. We know where those areas of support are. Okay, so as we go lower here, this is a hell of a bear market you can see right now. It's a very strong move down. So the odds are, if we go lower, if we can get a trap high, that'll be a pretty good entry there, right? Trap high, top of that channel. So, if the market commits and runs lower here, right? We keep going lower here before we take out those lows, those traps, right, above that high. Trap high off the high of a channel, a great setup. Okay, so keep your eyes on that as we go lower here. Or maybe this market says, heck with that low, we're going to go 1, 2, 3 break down, right? We're going to take out that low, we're going to hold that pullback, and we're going to blast, right, with a 1, 2, 3 move. What do we do in that situation? We mark up the low, we mark up the high, we draw our channels backwards, and we take the first test, because that's always the best test. Now again, I'm not going to go over all the specific entry setups, but the idea is once we get that 1, 2, 3 breakdown, we have enough momentum. We know that big round number is a juicy magnet. I don't really care where I am, right? If we get enough momentum, you will most likely, at the very least, get that retest of that low. It may not keep going on forever, right? Because where we are, but we don't need forever. We just need a little chunk of profit, remove the risk, get that stop down to point of entry, and then see how far it'll go. All right, so that's the idea as we go lower here. And again, I'm thinking off the high here, right? We're thinking a buyer failure, right? A seller pullback, strength moves, trap moves as we come off that high. I'll go into all those details, right, in the free course linked up in the upper right-hand corner. And don't forget, tomorrow morning, we're going to trade this stuff together in our trade room. Now, here's an idea, right? Here's a question for you. As the market runs lower, let's just say, for example, we get that pullback, we get that trap, right, for the entry going lower. Let's just say we get those traps, right, and the market takes off, completes that pendulum swing. Couple things you want to keep in mind, right, as we go down. The market may end up at these lows, and we may end up going sideways down here. Okay, if they go sideways down here, what's the plan, right? Find levels of resistance, maybe a trend line, maybe a swing line. A lot of times what will happen is the market will something like this, right, and then go sideways down here, right? So that's your cue. Find that area of resistance. Once that market starts to go sideways, the longer it stays at those lows, the more likely that creates a new magnet. Okay, it's very common for a magnet range overhead to turn into a new magnet range below. Remember, this range is from last week. So at some point this week, we are probably going to see a new range develop here. And we definitely want to be ready for it. So that might be it, right? We may end up, again, sell short off the highs of the channel. We finish off our pendulum swing and we start going sideways here. Now, this is where you find that level of resistance. You wait for that pop, right, up off those lows. You wait for those buyers to foolishly buy on that pullback, right? And we sell it back down again, right? We sell it back down again. We call these buyer failure patterns. Whenever you see a range, what do? You don't trade the breakout, you fade the breakout, you find levels of resistance and combine those areas with those failure setups. Another interesting thing to look for is if we do end up completing this pendulum swing, don't be afraid to apply that nested failure on the opposite side, right? So the range, of course, is a magnet. I have no problem once we finish off our objective, right? I'm not going to do that right here, but once we take out these lows, then if the bears come in and they try once, they go higher, they try twice, you better believe it. I can draw that trend line. I can buy off that low. One of my favorite reversals, right, is let them try once, let them try twice. If you look close, you can see up here, right, the buyers go up, they try once, they try twice, right? And that's where it starts to accelerate. All the way back down again. Same idea, right? So same idea here, we'll apply it down there. But again, I'm looking for this to take out those lows first, right? They take out those lows, the moving average comes over. This is where the bears can hold that pullback and blast, right? If they do, mark that low, mark that high. First test is the best test, right? You guys on the plan for that. But if they don't blast, right? If they try once and fail, they go higher, try twice and fail, draw that trend line over. And remember, these are classic cases where we oftentimes see that reversal into a new hidden channel pullback, right? So bears try once, bears try twice, buying off a support trend line, right? Or buying into those stops. I always sort of buy off the trend line in these situations, much better entry. And then what I'll do is I'll wait for that run higher, mark up that high, mark up that new low. You got it. And the first test is the best test. So think of that tomorrow. As you can see, there's plenty of opportunities we can trust in tomorrow's trading session, even if the bears complete this move down, right? In fact, if the bears can complete this, take out these lows, then let them try once, let them try twice, and we'll rip it right back higher again, right? Right back into that trading range. Right? Buying that nested failure, buying that first pullback off the low. All right, guys? So pretty good stuff here on the Nasdaq. What I'm really curious about here is will the Nasdaq and the S&P, will they kind of, get back together again, right? If you will. Because you can see here, the Nasdaq is very much a lot lower, relatively speaking here than the S&P. All right, let's wrap this thing up here tonight on the gold as we go into the GC, the yellow market now. Now that we know the plan here on the gold, or now that we've talked about the plan on the Nasdaq, let's now look at gold, because gold has a lot of what we've already talked about, right? A lot of this is here on the gold right now. First of all, big picture is bear market from last week into that trading range, right? Market goes up above the range, comes crashing back down. We mark the amount of the move above the range to the amount below the range, and bingo, we are right there right now, right? So Nasdaq, S&P, I hope you're watching this, because it's exactly what the Nasdaq and the S&P will be trying to hunt for here tomorrow. The Nasdaq obviously much closer than the S&P. The S&P is still above that trading range. But the bottom line, though, is very similar. We got the pendulum swing being taken out. So we know we're bearish right now. We could definitely see we are bearish here on this gold. But are we in a spot right now that really says sell me? Probably not, right? Definitely not as enticing as the Nasdaq or the S&P. So in the gold right now, we've gotta be patient. I would expect that sellers will be taking some profit here. I would expect that buyers will be looking for a chance to buy, going back into that range. And so we're going to hopefully get a bounce off of these lows, right, and try to get something going here as we go. Now, the range overhead is the magnet. As you can see, I've got my weekend gap there. Again, like I mentioned earlier, all three of these markets, right? All three of these markets have these weekend gaps, these big, wide open holes between Friday's close and Sunday evening's open. So we know we're bearish, right? The bears would love to complete this measured move down to that 1663. And as I mentioned in the introduction, when you go below that area, it is free fall until we go down to that 34.9. This market could really get good for those bears here in the next few weeks here. So very excited about the gold here for tomorrow. Now, I want to find areas of resistance. I've got a beautiful channel. That low there, that high there, just a beautiful channel here. That's where the money is right there, right? That's where the money is, up inside. Mark up my highs, underbelly of that range. That is definitely where the money is right now. So very similar to we talk about on the others. I don't want to sound like a broken record right now, but very similar here. If I just get rid of this here for real quick, we'll put it back here for tomorrow. But real quickly here, though, right, think about traps for shallow pullbacks, failures for deep pullbacks, and nesteds for really deep pullbacks, right? So, for example, let's say all we get is that little pop, right, above that high here. We don't get up into that channel top, which is where I think the good stuff's going to be tomorrow. What do we do in that situation? We look for traps, right? I don't want to sell too low. I got the pendulum right below me. That's a major area of support. So what do? Let the buyers try once. Let them try twice. Get that trap high, right? Traps are your bread and butter whenever you are worried about buying high, or in this case, selling too low, right? Selling into support, selling too low. Great spot there for a trap. Or maybe we go up into that area, right? Now we're talking. Now, let's get these buyers thinking this thing is bullish, right? Let's get one of these guys where it goes above the moving average, buyers come in, and again, see what happens, right? We go into a buyer failure, into a pullback. Again, very common, very, very common, these failure into pullback, right, combinations. Very, very common here. So we go higher. We go up into resistance here. Top of that channel, right, up into the underbelly of that range. Moving average comes over. Buyers say, oh, thank goodness, we're bullish now. They try to buy they're not bullish now, right? What does it take to become a bull market? They have to hold it and go, right? They've got to show me proof. There's no proof right now. I have no trust whatsoever in these buyers right now. So if they buy that pullback here, their stops are rocket fuel, right? Those stops are gasoline for gold sellers, okay? You want to pour more on it, right? That's what we want to sell. Wait for those buyers. I will not try to pick a top on this, right? We're not trying to pick that top, because you try to pick that top, what'll happen is you get short up here, right? You sell a top up there, what's going to happen? It'll come right up, stop you out, and then come crashing back down, right? You can't try to pick that top. They'll come right over, they'll tap your stop out, and right as you go pick up your keyboard off the corner of your office because you threw it like a frisbee, it comes up, stops you out, and slams back lower. We don't want to call the top. We wait for that up, that pull back. We know where stops are, and we can sell into those stop loss. And again, keep your eyes open for that, right? For that up and over, pull back and in, right? Buyer failure into pullback, back down to those lows. And I would definitely try to leave that runner in that situation, that measured move at 63.2. The bigger question I have is will this thing really jump, right? Will it really jump? Because if it does, I have levels overhead here, weekend gaps, trend line coming down. Honestly, like I mentioned earlier, I believe it was the S&P, we might get a 1, 2, 3 reversal. We may get that first test off the low, which again, if you have enough strength off that reversal, you'll get winning results buying that first pullback. There's enough momentum to it. That's the key. If there's enough momentum, right, again, if it looks like a duck, it's going to probably act like a duck. If you get the right setup look to it, enough momentum, you'll get enough people that they won't care, right? They'll buy that first pullback, right? So again, 1, 2, 3 into hidden channel pullback. First pullback is always the best one, right? Failure patterns, trap patterns, pullbacks, and strength off of that low, right? Buying off that low. You can learn all those details again, all those entry setups, right? All the specific techniques we use to get into those setups, right? Into those trades. They're all covered in the link up there in the free trading course, upper right hand corner. So we get the 1, 2, 3 go, 1, 2, 3 reversal, right? First test is the best test, and the market runs. We then run into that resistance, right? We run into resistance up top here now. Now the moving average comes over. The buyers try once. The buyers try twice. You know what I'm going to say, right? Draw that trend line over and hit them. Back into that range again, right? Buyers try once, buy it, right? Let those buyers, right? Again, I'll be looking to buy that first pullback, right? But I'm not going to be trying to buy as we go up into these areas of resistance, right? At this point now, momentum is not nearly as strong. The range below acts as a magnet. Let the buyers try once, buyers try twice. We can sell off the trend line, my favorite. We can sell into stops, right? A good alternative if you don't get to test that trend line, right? Sometimes you don't have the luxury, right, of trading that trend line, right? Like this one, we go up, right? Strong move up. Buyers try once, buyers try twice. If you're waiting for that trend line, right, you're still waiting, okay? In that case, though, you don't get it, so you sell short into those stop losses, right? Same idea, all right? And again, I'm just simply kind of covering the basics right now. You'll learn a whole lot more of this in our video classes, and of course, we'll trade it together in our trade room. So that's the general idea as we go higher here. As the market goes lower, right? As this market now or if it goes sideways, like I said earlier in the Nasdaq, if we do see this thing start to go sideways down, which is very, very, it's very easy to think it might. With all this bearishness, what do? We find levels of resistance. We combine those levels of resistance with our failure setups. I know I'm sounding like a broken record right now, but welcome to trading, right? Trading is applying the same setups, which like the back of your hand, over and over and over again. If you're looking for variety, right? Like I always tell my clients, right? If you're looking for variety, go somewhere else, right? Looking for profits, we don't need variety, right? You want variety, or you want to make money. That's simple as that. Repetitive patterns in the same basic situations. When you see a range, find those levels of resistance, right? Find those breakout failures and short the sucker back down. What will be interesting to see too is if this thing goes lower, right? If it grinds lower, just like we talked about on the S&P, right? If it grinds lower, what I'll do is I'll mark up that low. What I'll do in this situation is I'll adjust this channel to be here, and then I'll mark up those highs. Same idea. Wait for the pop. See what I'm doing? You're simply adjusting this channel down a little bit. If the market keeps going lower, wait for the pop, wait for the buyers to come in, and you got it, right? Using failure patterns to sell off that high, right, on the way lower. What would be very exciting for tomorrow would be if we saw a strong move down, complete that measured move, and they go, see ya, right? And they 1, 2, go. At that point now, mark that low, mark that high. First test, of course, is the best test. But again, there's a lot of open space down below us. So very exciting to see what happens here tomorrow on the gold if we can get this thing to kind of break free of this trading range. All right, guys? So remember, as this thing pops up, shallow pullback traps, deep pullback failures, really, really deep pullbacks, right? Use those nested failures, and don't be afraid to try that 1, 2, 3 hidden channel pullback, and then nested back down again. Don't forget, I cover all the specifics of the entry setups in the free trading course. You can grab that link in the upper right-hand corner, or grab the links you guys need in the description of this video. And don't forget, tomorrow morning, come out and join me, and we'll trade these setups together. We've covered a basic plan here for tonight. Tomorrow morning, though, 8 o'clock Eastern Time, I hope I'll see you there, right there with me. Go to battle with me, finding those entry patterns and succeeding together tomorrow in our trade room. Guys, getting registered for tomorrow morning's trade room is super easy. I'll put all the links you need in the description of this YouTube video, or if you're on the blog right now at Sideways Markets, check the big button below the video, and I'll put that button there to get registered for tomorrow as well. Also, don't forget, you can always call me. Right? Don't let my ugly mug scare you away there. Call that toll-free phone number. I would love to answer the call, answer all your questions, and get you registered for tomorrow, or get you ready for trading later on in the month of March. We got live chat on the left. We got live chat on the right. Don't forget to drop those questions in the comments section if you guys got them. And I hope by now you subscribe to our YouTube channel, because as you can probably tell, I am not messing around on this video newsletter. We're going to publish these every evening this week. So make sure you subscribe, hit that bell icon so you don't miss tomorrow night's video. But before then, though, I hope I'll see you tomorrow morning at the opening bell, and we can trade this stuff together. Guys, always, thank you so much for tuning in. Thank you for sharing this video with a friend of yours. And don't forget to come out and join us tomorrow. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.